World Copper Limited is a Canadian resource company headquartered in Vancouver. It's focused on the exploration and development of its copper porphyry projects. Those are Escalones and Cristal in Chile and Zonia in Arizona. Arizona is a new acquisition. WCU is listed on the TSX and OTC exchanges and has a market cap of around 42 million pounds, with apologies. Two of these projects already have estimated resources with significant soluble copper mineralization, with at least two other copper porphyry targets with exciting potential to expand the resource base. Zonia was acquired as part of a merger transaction with Cardero Resource Corp, and the deal is just completed. We're delighted to welcome Nolan Peterson, CEO, to tell us more. He's the first of our TSX companies. Welcome, Nolan.
Hello, Donald. Thank you for having me. Thank you, everyone, for joining as well.
Now, I presume it's morning. It's morning time for you, is it, Nolan?
Yeah, that's right. It's morning here, but thanks, everyone, for taking time out of their evenings to listen, especially to stay for my presentation, too.
No, I'm rather. I always think the ones at the end, everyone turns up for the first ones, but I always think the last two are the real. They're the companies for tomorrow.
Well, I would agree when you hear after you hear our presentation. I hope everyone does.
Okay, I'm holding on tight.
Okay.
Over to you, Nolan.
Thank you, Donald. Thank you, everyone, again. So as Donald mentioned, World Copper is a Canadian-based junior mining company focused in Chile and Arizona right now. I'm going to move pretty quickly through our deck because we do have a lot to talk about, but a limited amount of time. So I'll just try to focus on the highlights. I'll introduce you to myself as the CEO, so I won't talk too much about the rest of the management team. My background is in engineering. I've been a metallurgist for my entire career. I spent the first 5 years of my career in project development for a company called S&C Lavalin. I then went to work for a producing gold company and built a couple projects, including one in Kamloops in BC called the New Afton Copper Gold Project. And then along the way, I picked up a CFA charter and an MBA. So I bring a strong financial background to the company as well. So maybe a little bit different than a typical junior mining company based out of Canada, where you have a geologist or promoter in charge. I'm a exploration and development person who has built assets and worked for companies that have put them into production and has operated them, most importantly. So that should give you a little bit of a different flavor to what we bring at World Copper. So why are we involved in copper? Well, we do have a number of slides on our deck, but I'll just focus on this. A lot of people may be aware of this, but probably most people are not. There's a very large supply crunch coming for the copper space in the near future, especially by the end of the decade. You have analysts, sorry, I'm on slide 12. You can see analysts such as Goldman Sachs have called copper the new oil. Why is copper the new oil? Because of its role in electricity and, most importantly, power generation, which is, of course, oil's primary use. So by the end of the decade, Goldman Sachs and others are projecting a deficit of about 12.5 billion pounds of copper. Now, what's driving that is not just supply and not just demand, but both of these running in conjunction. So you have a supply issue because it's becoming harder and harder to find attractive, high quality copper deposits. They're becoming lower and lower grade, which increases the operating costs. They're becoming harder to find, harder to permit, much more expensive to put into production. You find here that, here's a stat that I like to show. In the last decade, $50 billion US was spent on exploration and development. Only 225 billion pounds of copper was discovered in that period. Now that may seem like a lot, but more copper was found in 1 year, 1991 alone, than the last 10 decades, or 10 years, sorry. And in the last 5 years, only one major copper discovery has been found and only 4 in the last 10. On the other side of the coin is the demand side. Everybody knows that copper is very useful for electricity, but they also just think that since it's an industrial metal like iron or aluminum, it will always be there for us, but that's simply not the case. And also we have copper being used more and more in things like electric vehicles, in power transmission, in also for power generation for solar and wind power. So this demand curve here, I think, is pretty steady and does not include a large spike. And we see what happens when technologies start to just catch fire around the world, smartphones, HD televisions, the internet, social media. These things skyrocket in popularity and demand once something just switches, and that here is not even accounted for. And you can see with the potential mines coming online and just a steady increase in demand, there's going to be an expected deficit starting in the next 2 or 3 years. Right now, we just match demand with supply globally, but this is going to widen as we progress. And people are forecasting up to $7 per pound of copper. Right now, we're trading at about $4.40, which is just 10% off all-time highs. And we've been pretty stable there for the last few months or so. So let's talk about our assets. Let's jump to Chile, which is where we are primarily focused right now with our 2 assets, Escalones and Cristal. And I'll talk about our flagship Escalones in a second. Chile is the #1 copper mining jurisdiction. They produce 20 to 30% of the world's copper at any given year and have about 30 to 40% of the world's copper reserves and resources from a single country. So they are very critical in the copper industry, largely due to the geology and geography of the nation, which lies along the fault line that created the Andes and other mountain structures down there. So Escalones is our flagship asset, and it's in the Santiago region of Chile. So it's in an area of good infrastructure, very close to a major development, but also being far enough away from the city where that's not a concern at all. You can see there's a number of mines in the region already, including El Teniente, which is the world's largest underground copper mine and is owned by Codelco, which is the world's largest copper producing company. We are 35 kilometers east of El Teniente, so they'd be somewhere in the white area to the southwest of our property. So this property has, within this orange circle here, 25,000 meters of drilling in 53 holes. So we have an established resource, which I'll talk about in a second. We also have immediately to the south of that established resource, a supergene target, which we call the Mancha Amarilla. And to the northeast, we have 3 other copper porphyry targets that easily have the potential to be as large as the main resource is already. So what is a copper porphyry? Quite simply, it's where you find the largest copper deposits around the world. They are primarily the result of volcanic or seismic activity over millions of years ago. And that is why Chile has these large deposits. And that's why we have Escalones, which is a very large deposit as well. I will get a little bit technical with this slide. This is the most technical I will get. I'll try to keep it brief. There's 2 primarily ways that copper is produced globally. One is through sulfide flotation and one is through oxide heap leaching. Now, every copper porphyry deposit, for the most part, has a very thick sulfide layer deep below the Earth's surface, and then an oxide cap that is about 100 meters to 300 meters thick on top. So that material is oxidized copper sulfide ore that has been changed to copper oxide. And what does that mean? It changes the way that the material is processed, and it changes the chemistry by which it's processed as well. And that has very significant implications on the economics and viability of a project. So 70% of the world's copper is produced via sulfide flotation. This process is very expensive to develop. We're talking billions of dollars to put a substantially sized scale mine into production, as well as high operating costs with low margins. You require 4 times as much water consumption as a comparable oxide heap leach process per pound of copper, and they emit 60% more greenhouse gases from start of mining to production of copper through this process. You also have to ship a concentrate to a smelter, usually somewhere in Asia like China or South Korea. Only then do you get useful copper that you can use in the marketplace. Oxide heap leaching produces about 30% of the world's copper. It's not a new and innovative technology. Neither of these technologies is. It's well established, but it's so small scale because most of the large copper oxide deposits around the world have been mined already since they've been near the Earth's surface. Why is that the case? They're easier to develop, lower initial capital, much lower infrastructure requirements. You can build a sizable oxide heap leach operation for under $500 million. compared to, again, $1 to $2 billion minimum on the flotation side. The operating costs are substantially lower because the infrastructure and processing requirements are lower, and the processing is simpler. You simply use sulfuric acid, which is a byproduct of the smelting process of sulfide flotation. You dissolve the copper, then you extract the copper through using electricity in a cleaner and greener process, gives you 100% pure usable copper local to your mine. Already traders pay a premium for grade A cathode, and they are starting to pay a premium, the manufacturers are, for greener and cleaner sourced copper, and that is only going to grow in the future as this becomes a new reality. So how does that tie back to Escalones? Well, when we picked up this asset, we had a sulfide resource. The previous owners of the property were focused on that layer that was below the oxides. We, over the last year or so, did some work, metallurgical work, that allowed us to understand this resource from the oxide potential by focusing in on the oxide layer that I mentioned. And what we found is that we actually have one of the largest, actually the largest, copper oxide resources in Chile at the moment in exploration and development. 426 million tons, grading at 0.37% copper. Now, if you don't follow the copper mining space, these numbers may not mean a lot to you, so I do have some benchmarks for you. These are mines that are oxide heap leach operations that are in production today, held by majors like Codelco, Glencore, Anglo American. You may have heard of some of these companies. Our grades and our tonnages are right within the ballpark. In many cases, our grades are better than these mines that are producing cash for these majors right now. Also, as sulfide operations, none of these assets would be in production right now. The grades would simply be too low grade or too low tonnage to be viable, and they would not, and the cost would be too tremendous. This here is the most important slide in the deck right now. If you come back next week when we have some news that I'll talk about in a second, this slide will not exist because we'll have a more precise comparison out. But until then, we have a benchmark company. They're called Marimaca Resources. They are a Canadian junior mining company as well, based in Vancouver, with an asset in Chile called Marimaca. They have what's called a preliminary economic assessment, which they produced in 2020 in September, so relatively recently. The PEA is the first step in understanding the economic viability of a mining development. In their PEA, they had a mine plan that called for 131 million tons, grading at 0.47%. We have an available resource that is 3 times larger than their tonnage, and our grade is a little bit lower, but in total, 240% more copper in the ground than they do. Again, processing with the same type of process. Their initial capital was 285 million. Our PEA, which will be released sometime next week, is going to be coming in at under 500 million, as you would expect, because we are roughly twice the size of Marimaca. Their PEA pre-tax NPV at $3.15 per pound copper. Remember, we're at about 440 right now, with 757 million US. And on January 17th, they were trading at 6 times our multiple right now, 6 times. What is the difference? We do not have a PEA out, but again, we've been working on that for the last few months, and that is due to be delivered next week. And we are very excited about that. So I'm trying to get the message out to as many people as possible, including yourselves. We are a very new story in the market. This company has only been publicly traded for about a year. In the mining space, these types of stories take 5 to 10 years in some cases to develop. We're acting very rapidly to show that we understand how to develop a copper asset, and that's what we're bringing to the table. If you, this here is a chart that shows very clearly that Escalones is the largest copper oxide project in exploration and development in Chile right now. And that is even compared to majors such as Codelco and KGHM. KGHM is one of the largest copper producing companies out of Poland. We are larger than them, almost twice as much as these large deposits as well. Not only do we have the main Escalones resource, but we also have the Mancha Maria target to the south of the main resource. So if you look at this map, you can see the drilling that's been done to date. And we expect drill permits to come in for the Mancha Maria within the next 2 weeks. So it's a very exciting time, lots of news flow coming for the company. Those drill permits will allow us to drill this Mancha Maria. And our thesis, our geologists believe that this resource is actually double this current size. Why do we believe that? If you see here on the far left in the background, that is the Mancha Maria, the splotchy mark there of orange. That is just a continuation of the main resource. So by drilling this lithocap, we can effectively double this resource in size, make the economics even more fantastic than they already will be, and give us more options for development. And that's not even including those 3 other targets to the northeast, which I mentioned on the previous map. So that is Escalones. As Donald mentioned, we also just recently closed a transaction for Zonia. Zonia is a brownfield development in Arizona, another amazing copper mining jurisdiction. This project was brownfield, has already had been pre-stripped by the previous operator in the 60s and 70s. They shut down due to low copper prices and has not been in operation since then. 50,000 meters has been drilled on this property. It's well understood. A preliminary economic assessment was carried out on this asset 4 years ago at $200 million initial capital. At $3 copper, it was a $200 million after-tax NPV. At $4 copper, it's $450 million after-tax NPV. After-tax first-year free cash flow of $150 million, payback in a little bit over a year. We also have the opportunity to expand this resource because in that PEA that was carried out 4 years ago, they constrained the resource and cut off about 50 million tons. It's about 100 million tons in the PEA. There's 50 million tons, so about 50% more can be added to the next PEA that we will be doing to make this project larger and more attractive. We also have a northeast target here that has had no drilling done on it yet to date, with 300 to 500 million tons of available material once we get some drills up there. People ask me, how is it possible that World Copper has these 2 fantastic assets? I was discussing with a major broker in Vancouver, investment banker whose fingers on pulse of the mining industry. He said, I've never heard of your story. What you just told me is fantastic. We need to start talking, put you in front of our analysts. It is that new of a story that it hasn't been picked up yet. And they are very interested, as every institution is, when we get around to telling them about it. So to put it all together, this company has a market cap of about 70 million Canadian or 42 million pounds, 43101. So that's the study you need in Canada that's been vetted by independent engineers and geologists to prove the value of your assets. 43101 backed assets with significant exploration upside. We're a significant undervalued opportunity. For people who are hearing about it for the first time, I encourage you to take a look into us and potentially invest. And I'm happy to answer any questions now as well.
Gosh, Nolan, that was incredible. What a pitch.
Thank you.
That was extraordinary. You're not shy at coming forwards, Nolan.
No.
You absolutely believe in this, don't you?
I absolutely do. And you know, some people say, when I tell them, they say he's an engineer. Engineers, they don't bullshit, right? We excuse my language.
That's so true. Yes,
it's not in me.
Miners.
Yeah, it's not in me to exaggerate. I've worked on many studies in my career. The one that we will be delivering very soon, anticipating next week sometime, is certainly the best one I've ever had the pleasure of working on, and one of the largest and best ones that I've ever seen, especially when you consider the scale that Escalones is at. There's some very large projects in Chile, and of course we have the largest copper oxide project in Chile. You don't get to be the largest anything copper related in Chile unless you really do have something special.
Yes, that's a very good point. Preliminary economic assessment.
Yes.
Now, over here, is that what they call a pre-feasibility study? No,
it would be a scoping study level.
It's a scoping study.
Yeah, pre-feasibility would be next.
So it's a PEA as an early days thing.
Correct. Yes.
Fantastic. What does your balance sheet look like, Nolan?
We have about $3 million of cash on hand at the end of the year. We also have $25 million worth of warrants that are in the money at 60 cents Canadian. We're trading at 80 cents right now. We have a number of warrant holders who've committed to exercising and holding their shares because they believe in financing and potential raises at a higher valuation. So we are well financed in the moment to basically answer the question that usually comes around that question. We are exploring the opportunity of bringing on strategic partners who would add clout and visibility to the story, but in the near future, we don't anticipate having a need to raise any capital.
So you're slightly taking the words out of my mouth, but
yes,
you've answered it all in there. So
I get asked those questions all the time.
So what does the future hold? You know, will it be a strategic partner? I mean, it's a lot. Escalones is a fantastic thing, but it's years and years of grind away.
Yeah.
So, how do you get yourself there? How do you fund yourself there so that you can make that mind come true?
Yeah, so we're not doing anything that's any different than the Canadian junior mining model and really the junior mining model globally. These major companies need small companies like us to do the exploration work and find the capital and raise it and you know, take the risk so that they don't have to. And then of course they either come in later and do a joint venture or acquire the project. Or in the case of Escalones, we actually have a very fundable project for a copper project of this scale. Under $500 million is right within the junior to medium-sized space for development. It's something that I could raise money with a mixture of debt or a capital raise, or even selling a royalty or something like that. But at this point, we are just putting the economics out there, de-risking the asset, making it as big and as valuable as possible. We're very cost effective with our capital distribution. We've done a lot with a very limited amount of money so far. With the money that we have going forward, we will be expanding the resource. And we're always open for business for major players to step up and step in. And I think if you take a look at the space right now, as I mentioned, it's becoming harder and harder to find these deposits. Many of them are deeper at depth. They cost $2 to $3 billion to put in place. They use more water. Permitting is a nightmare. You're going further afield to jurisdictions that are challenging to operate in, such as Africa. And so really what we are bringing to the table is a lot of intangible competitive advantages as well that will make it very enticing for a major to take a serious look at.
Are you in discussions with miners or majors, as you call them?
Certainly we are at all times. We had a number of conversations in an earlier round of marketing before we put out our updated resource statement. These guys move on a 6-month to a 1-year time frame before they circle back. So many of them probably haven't even realized that we've changed to our Oxide story and have a very impressive one. And also that once we start getting more independent analyst coverage out there, and once this PEA is out, that will spur some of that. I think that they'll start to take notice and they'll circle back immediately. But we do have ongoing discussions regularly.
Josh Cole is not so impressed with Escalones, I'm afraid. But the good news is he's not in charge of the company, and you are. He says it's too far. Escalones is too far to export it to the coast.
Yeah, we don't.
You're too far from any port. You have to be massive for it to be economically viable, he says.
No, but see, that's the thing that people don't understand. Even people who apologies to Josh, I believe, who follow the mining space. Copper oxides do not require concentrate transportation. We don't produce a concentrate. We're not shipping anything by water. It's all comes out as 100% pure, clean copper cathode. Every country in the world uses copper cathode in manufacturing for their industries, especially Chile. And even if we are taking it to port, instead of a 30% copper concentrate, we're moving 100% copper in nice, clean, stackable plates. That's why you get at least a 1% premium for it already. So I do have that conversation with many people who say they've been following copper mining for 30 years. And then they ask me, what are you going to do with your concentrate? There is no concentrate. That is the oxide advantage and story.
Would you sell it in Chile or
sell it to metals buyers in Chile or globally who may be interested? Many of them are looking up to lock up supply, and especially if they can get it in cathode form, they get that's why they pay a premium. They get a premium for it as well.
Great. Could you talk a wee bit more about the price of copper for your particular product from Escalones?
Yeah, so
you're almost top of the market, you said.
Yeah, so copper is trading at about $4.40, I believe, right now per pound. Hit an all-time high of $4.80. last year. Right now, supply is tight. If you track the London Metals Exchange, at any given moment, there's a slight surplus of copper. But there is anticipation of some large mines coming online this year that may help to ease those pressures. But after that, for the next 2 or 3 years, and then certainly after that, there's a big question mark of where copper is going to come from. I will also say that my experience in the copper market and very large mining developments is they never meet their production targets, especially for new mines. And so if you think about it, if we're walking on a knife's edge of production and we are already hoping for these mines to come online, assume a 6 to 1 year a delay to their production reaching full capacity. And in that time, demand inexorably takes a 2 to 3% step up. From this point on, copper will always be a step behind. There's no surge of copper coming in the near future. I'll refer back to this chart here that shows mines with high, medium, and low probability of coming online. By about 2024, we do not have an answer. That is not something you can make up an answer for. Maybe there's substitution metals, but copper is just so perfect for what we need it for that any other substitution will be inefficient or more costly or more wasteful on an environmental front, which is why we're using a lot of copper for decarbonization and electrification to begin with.
Do you see World Copper as an explorer with an exit strategy, or an explorer developer with a slightly later exit strategy?
I see us as a development company, exploration and development. So both, as you mentioned, we've got impressive people on our team, including a gentleman named Marcelo Awad, who is the former CEO of Antofagasta Minerals. I think they're the 3rd largest copper producing company in the world, Chilean based. He was their CEO for 8 years, and he took that company from $4 billion to $20 billion, developed 3 mega projects under his stewardship. We also have a gentleman named Krzysztof Napierla. He's an exploration and development person from KGHM. He was our KGHM's general manager in Chile and South America. So we have already the people who've seen it done, who've put mines into production, including myself and Krzysztof and Marcelo, who financed them. So we are offering that as an opportunity for World Copper to advance, so that we are not just a one-trick pony that has to explore, has to rely on somebody to come in and take us out. We're using the experience that we have to create value for shareholders. And at some point, there may be an exit, or at some point, we put our mines into production a number of years from now.
You might potentially take it all the way to a mine.
You always have to present that as a possibility. I can't rule it out. Otherwise, I lose a lot of people who would just say, I want to show viability, right? Or else, why am I investing in here?
It's a game of chess. It's a game of chess.
Exactly.
Robert Litt wants to know what the Chilean, what's the working environment? What's the political environment, the in-country risk? All those kind of wise words.
So Chile has a new president-elect. His name is Boric, and the market has generally responded very well to him since he has won the election. The US dollar about 2 weeks ago was at a 3-month low against the Chilean peso. He's made some very attractive cabinet appointees that the business community is very supportive of. So in general, he's well received, well liked. And what he has positioned himself for mining development is he's in favor of greener development. He's not opposed to mining development in general. And of course, you can't be in Chile, which derives so much of its GDP from mining developments. So I think it actually bodes well for World Copper, because we have a copper oxide project that is cleaner and greener, just like that Marimaca project that I mentioned. So it has a lower environmental footprint. It doesn't require a tailings storage facility. It doesn't require building a port facility, to go back to one of the earlier questions. Some of these mines have to create ports on the coast out of whole cloth that never existed before, and put in rail lines to move their concentrate. We don't have that problem. So I think that we position ourselves to be that type of development, that we will rise to the top of our peer group when governments like Boric are looking to promote mining development in Chile. We're very receptive to that. We're a very on-trend company. We have a young management team such as myself who understands this. Copper is going to play a significant role in decarbonization and the so-called green economy of the future. And it's not going to be enough to just say we contribute to copper production, we make copper, and then but who cares about the pollution and the environmental impact we have along the way? We are looking to promote a greener and cleaner solution to that as well.
I'm gonna have to stop you there, Nolan.
Okay.
Tom Davidson very quickly says he can't buy. He's obviously tried, but he can't buy. You're not listed in either Hargreaves Lansdown, which is one of the big trading platforms over here, or IG. So collectively, internet, let's find a solution. How do we buy shares in WCU and then tell everybody else? Because I think we've whetted people's appetite. Nolan,
Thank you.
That's it for now. Thank you so much.
Thank you, Donald. Thank you, everyone, as well.